Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Well, Galaxy Surfactant posted a decent revenue growth in its revenues and profits, while its margins declined in the quarter on a YOY basis. To discuss this quarter gone by and the way forward, we are joined by K Natarajan, the Managing Director, Galaxy Surfactants, joining in now. Mr. Natarajan, good afternoon. Thank you so much for joining in today. Well, you know, your EBITDA per ton, it has come in slightly lower than the guided band of 20,500 to 21,500 rupees per ton. You have spoken about some headwinds that the demand scenario is seeing right now. In that case, do you stick to your EBITDA per ton guidance of around 20,500 to 21,500 for the year? Also, what happens to the volume growth guidance of 6 to 8%?
Oh, yeah. Thank you. Thank you for having me on the show. So, yes, I will. We are sticking to the guidance of EBITDA per metric ton of 20,500 to 20,500 because we do see that the way our rest of the world is picking up and the specialty ingredients volumes are going up, we do see that we have a good chance of ending the year within the guided range of 20,500 to 21,500 because we have ended this first half at around close to 20,100. So we do see that things can get improved in the coming quarters. With regard to volume, yes, we do see challenge in India, which was the market that was driving a good portion of our growth. But I think credit to our business model, we've seen the other geographies cooperating well to enable us to deliver our first half volume growth in the upwards of the lower end of the guided range of volume growth. So yes, we will stick to our guided range of volume growth as well.
Okay, so you're sticking to the volume growth guidance of 6 to 8%. You're hoping to reach the lower end of the guided range and also sticking to the EBITDA per metric ton guidance that had given of 20,500 to 21,500. Talk to us about the on-ground demand as far as Q3 is concerned. You mentioned that there has been some slowing demand that you witnessed. Also, FMCG companies have spoken about the slowdown. What is the on-ground demand trends as far as S2 is concerned?
Demand trend, I think urban demand obviously has registered degrowth, and the growth in the rural demand has commenced, but not in a significantly superior way to be able to mitigate the degrowth that has happened in urban. The commentary of my customers and our discussion with customers tells us that probably we may have to wait out for 2 more quarters for things to pan out well. The only spoiler in this is the sudden surge in commodity inflation, and that's something that needs to be kept watch on. And our customers also have been looking at how do they increase prices of the end products in a very calibrated manner so that it doesn't impact the very slow pace at which the demand growth is happening.
Okay, so Mr. Natarajan, you speak about the risk that is the higher commodity prices, even your raw material prices, that is fatty alcohol. Prices have risen there, right? Are you able to pass it on to your customers, considering a situation where demand is already on the lower side? Do you think that is something which will be absorbed by the market?
Oh, yeah, so this is something that has been significant increase. It's not something that's a very incremental stuff. And it's something that is there for every one of us who is in this market. And that's something that, yes, we will pass on. We don't have a choice. And we do see that the customers also accepting it. But the problem is with this sort of increased prices, the sentiment gets impacted negatively. And that's something that we would have done without. We do hope that, things get better as we move forward in the coming quarters.
Okay. Give us an update as far as the mild surfactants part of the business is concerned. You've been adding capacity over here. You said it's been gaining traction with MNCs. How much of it is part of the portfolio now? And what are the targets that you've set for yourself over here?
Yeah, special ingredients continue to be about 40% of our overall revenues. And mild surfactants is a significant portion of that. And we do see good amount of projects in pipeline getting matured with many of our customers. And we do see a good traction. And there's a huge focus on this with the way that we are even building the organization for this. We do see this is going to be something that will significantly aid our profitable growth in the coming years.
Okay, so you said specialty portfolio is doing well for you. What is the volume growth that you're anticipating in this segment in the second half, or say maybe FY25, and even in the other segments, geography-wise, if you can give us a sense of what will growth look like, which would be the growth driver for the business?
Yeah, so it probably pretty much the template will be similar to what was in H1. You need to have, you will have the rest of the world doing good amount of the heavy lifting in terms of volume growth. We do see that India would continue to be into a flat to 2 to 3% growth, and the balance has to be made up by Africa, Middle East, Turkey, which did have certain supply side challenges in the first half, which is getting taken care in the coming months. And we do see that will aid us in terms of continuing to be in the guided range of volume growth of 6 to 8%.
And you spoke about supply side challenges. We were speaking to Aarti Industries the other day. They said freight costs have come down in last 2 weeks. Is this something which will help going forward? And what about the container delivery or container availability as well? Is that an issue?
The freight rates, geography-wise, there have been some particular corrections, but we need to wait and watch because there's also a high season months as far as the festive season in Europe and America. That will wait and watch, but more concerning is the reliability of container availability and sailing of ships. That's something that needs to improve significantly. And that is what actually ended up messing up our supply chain into Egypt in a significant way. We also had that in India, but we could manage that with little of impact. But Egypt got impacted significantly because incoming got delayed anywhere between 30 to 45 days. Things have improved now, but we only hope that this continues and there is no further escalation in the geopolitical situation, which can then again present with newer headwinds on this front.
Thank you so much, Mr. Natarajan, for joining us and taking us through how business shaped up as far as Q2 was concerned and the way forward for H2. Well, let's now slip into a short break. The management of EPAC Durables joins us to discuss their Q2 results on the other side. Stay tuned.